The euro versus US dollar dipped in early US trading, but found support against a key support target that I outlined earlier in the session. That support target has given the buyers the go ahead to push to the upside, and they've indeed done that, trading to new session highs for the day. What next for this currency pair? What do we have to look forward to next week? We'll talk about it in this video. This week in the euro versus US dollar, the price started the week right here, moved initially to the downside, up and above and below the 100 and 200 hour moving averages, and then took off to the upside as President Trump was sworn in as the president, and we saw up and down price action, but with momentum to the upside. The initial move to the upside that we saw peak on Wednesday found resistance sellers in this swing area through here. Also against a 61.8% retracement of the move down from the December high to the January low. The swing area was defined by a number of different swing lows right here. We broke below that level and then started to use this area as a resistance on moves here, here, here. We moved back up to that level, back to the 61.8, and found willing sellers. In trading yesterday, the price did move below the 100-hour moving average on talks of tariff by Trump at Davos. But that was short-lived, and we started its rotation back to the upside, moving up to the swing area through here, defined by these levels toward the end of the U.S. session yesterday. And in trading here today, we moved back above those levels and also above this swing area between 1.0448 and 1.0461. That's key because a break to the upside came back down in trading here today and found support buyers against that old ceiling area right through here and push to the upside. So the buyers are in firm control. Going into next week, this area is going to be key support. As long as the price can remain above that level, I think the buyers are happy. The sellers are feeling more pressure, and we should see further probing to the upside. Conversely, if the price were to break back below that level, the emotions will change the other way. The buyers won't be happy. They'll be disappointed on the failed break. The sellers will be confident that they can push further to the downside and then look toward the 100-hour moving average, maybe look toward the 50% retracement level, 1.0402. And if we get below that level, continue to move down toward the rising 200-hour moving average. This is going to be the key level on the downside. Now, if that doesn't happen, if we don't get that break, where are we going? The next target area comes in against this level right through here. This area is defined by a number of different swing lows right here, which try to form a floor. Then we broke below the floor, and it became a ceiling through here, 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 and here before finally moving to the downside. So this area between 1.05325 and 1.0543 is going to be the next target on the top side. Get above that level, and we start to look toward this area up here, which is defined between 1.0592 and 1.0609. I'm going to have to go back in time to show you the importance of this level. It has some low or some highs right through here, of course, but going back in time, you can see the number of different times that this area, follow that area, was either support right here or resistance right here. So you can see how it was a ceiling here. We had that failed break to the upside here and then reestablished resistance right there. So this level between 1.0592 and 1.0609 is a key level. It also is near the high from December at 1.0629. So that's the progression to the upside, is get above this swing area right through here, then work toward this swing area right here, and then we're looking toward the December high at 1.06293. Now, taking a look at the daily chart, you can see where that December high comes in. And if you take a look at that December high at 1.06293, it comes within this swing area on the daily chart between 1.0600 and 1.06355. Get above that level, and traders will look toward a key technical target up here, which is defined by the 100-day moving average and the 50% retracement level. Both those levels come at the same level at 1.0695. Make sure you put a star on your chart near that level, because that's going to be a key level. Fundamentally, next week, we have the ECB and the Federal Reserve both announcing their interest rate decision. The ECB is expected to cut rates by 25 basis points. The Fed is expected to keep their rates unchanged. But recall that Fed's Waller spoke this week and was more dovish in his comments. Got to keep that in mind. Also, with new President Trump, he's said that he demands the Fed to cut rates. Also, he expects that inflation will come down. We'll see how the rubber meets the road in his promises. Will that happen? If so, the dollar can go lower. So we got to pay attention to the technicals. They'll help tell the story. That's my broad view, my full view of the euro versus US dollar, not only today, but going forward. Good fortune with your trading. Bye-bye now.